Welcome back. The bulls have won the tussle today, so no two ways about that. The Nifty and the Sensex will end with over 1% gains, but one eye is still on the mid-cap index, which although has recovered from the lows, will still close in the red. Let's get you some market opinion. We heard it out from Tushar Pradhan of HSBC Global Asset Management earlier in the day, who says that interest rates at these levels are manageable unless they trend much higher. Listen into what he had to say, and then we'll come back with the final moments of trade.
Well, the market kind of anticipated the move in the economy, but the economy now, and I'm talking about the global economy here, once it starts to heat up in some way, will lead to inflation, will lead to slightly higher interest rates. And then that is another issue that the markets will have to deal with. So what do you wish for? An economic upside or more of a tempered market going forward? I don't know. But these are the things which we grapple with now at this time. I think cement has been strong throughout. In fact, I would say even the lockdown period. We've seen some of these activities as soon as the construction activities began. We've seen a lot of follow-up in the real estate sectors as well.
Okay, just going through some of the global data points. The US 10-year yield is now at 1.53. Remember, we have seen 1.6 as well. It's cooled off quite a bit. That's one factor. And the US and the dollar index, remember the high was 92.5 today. It's now back to 92, almost in fact about to break 92 on the dollar index. So it's this combination, the bond yield coming off to 1.54 and the dollar index coming off. I think both of these have really helped this last 1 hour move because the market's assumption is that perhaps this would mean some kind of risk on once again globally, and perhaps this going to lead to some kind of FI monies as well. I mean, if you look at the global screen as well, you can see that there's more green than red as far as the global screen is concerned. Some of the markets had, of course, closed already, so you can't go by them. But the ones which are still trading, I think you can clearly see that most of these markets are at high point right now. Okay, before we wind down, Anand, I had just one last question for you. This whole PSU rally, I know you don't like some of these stocks, but is something changing fundamentally here? Is it time to perhaps relook?
Well, certainly anyone that is in the candidate list for being sold off completely is obviously something you want to look at. I wish the government would be more transparent in terms of the land assets that they have, because some of the PSUs really don't have any strategic advantage, for example, shipping corporation. But and it's difficult to understand how to value it without the understanding of what land they own. But for those which are actually operating businesses like BPCL or BEML or so and so on, there is no question, or even RailTel, for example, many of these companies in the hands of private sector can do a lot more than what the government will ever be able to do with them. And consequently, they would be at a premium. Even otherwise, from a valuation, from a value perspective, like I've been arguing, it is value rather than growth, so long as you expect inflation to move up. Most of these would be classified as value because, the disdain for PSUs is so long and so deep that, they have actually been beaten into the ground and more. So I think, public sector banks still continue to remain reasonably attractive. Especially those which are likely to be those that will be sold. But even if they are not likely to be sold, they are at least likely to get back to book value, if not marginally higher. And many of them are still trading below that. So yes, selectively PSUs certainly is something that one should be having in the portfolio now.
Okay, so selectively PSUs should still be in your portfolio. Anand, thanks a lot for joining us and have a good day. We're winding down what has been a really volatile day of trade. Anuj, it's sort of bipolar, right? You don't know which way this market is going to go. But today, thankfully for the bulls, the market has ended higher. But your final comments?
Yes, Sonia, yesterday, you could have made an assumption looking at the US futures that the market would collapse today, but the market actually had a gap up. Now, right now, do you want to extrapolate looking at the NASDAQ futures and this whole bond yield data? That's right now's news. But things change, this is not a market in which you want to extrapolate too much and keep positions open. The market always gives you a fresh entry opportunity, but it's going to remain treacherous for some time till you break out either above that 15,250, 15,300 band, or you break down below 14,950, 14,850. I think till then you'll have to make peace with this range, and perhaps that's how you'll have to trade the market. But a lot of stocks did well today. The last hour clearly belonged to the large caps, and a lot of these stocks did well, like HDFC Bank, Kotak Mahindra Bank, HDFC.